Yo, what's good, traders? This is Jay Bari here, and in this video, I'm gonna actually be talking to y'all about what I personally think is one of the best ICT concepts that I've learned since I've been studying his content. And basically, right here in this presentation, or in this quick little video, I'm going to be talking about Sunday's opening price and how I utilize that very concept in my personal trading. Um, Me personally, I'm more of a swing intraday trader, so I'm normally holding my positions either through Asian. I'm usually looking to enter in Asian session and then continue to hold that all the way to the London, the London, and then all the way to New York, and then potentially like into the PM session. And just basically, I'm just trying to capture an expansion in throughout the week, right? But I'm gonna get into the video. But before we do that, I do ask that you guys please subscribe to the channel, like the video, and feel free to leave a comment down below about what you guys personally use from ICT's concepts and everything he's taught. So we're gonna go ahead and get into the video. All right. So why Sunday's opening price, right? So depending on where we close on Friday, we can use Sunday's opening price level to determine market direction for the week. The idea is that if the market is going to move a certain direction for the week, it only has 5 days to do so, right? Unless we have some type of consolidation week, right? So, um, again, earlier, like I stated earlier in the video, I'm more of a swing, uh, short-term trader. So I'm looking to hold my positions for a certain amount of time. I'm not looking to get out in exactly an hour. I'm looking to enter at like key areas of like points of interest, whether it be like a fair value gap or an old low or old high on a higher time frame. It's either the weekly or the daily. Um, and then I scale down and look for reversal entries inside of those smaller time frame areas, right? So the idea is that with Sunday's opening price, depending on where we traded from last week, um, going into Sunday's market open, I want to see like, okay, so are we going to expand or are we going to, um, well, are we going to expand higher or are we going to expand lower going into this week, right? So at Sunday's opening price level, are we near any type of like PD array or other areas of interest? So like whether it be like an order block, fair value gap, old lower, old high. Me personally, I tend to use the fair value gaps and the old highs and old lows as my reference points or my high time frame reference points, just because they're the easiest to see, right? Um, so yeah, that's the idea of utilizing Sunday's opening price as a way to like kind of filter out, okay, if we're gonna expand higher or lower this week, okay, I want to see um where are we most likely to go. Like if I'm anticipating us to be long going into the next week, right? So what I'm looking for some type of liquidity raid underneath Sunday's opening price. So Sunday going into Monday's opening range, that's basically what I'm looking for. I'm looking for like a liquidity raid or some type of reversal at a higher time frame key level, right? So I want to see that happen between Sunday and Monday, preferably Sunday and Monday. I can go into Wednesday, go up to Wednesday at least to look for entries, and then honestly, if I don't find anything, I just don't trade, right? But that's the idea. I got some examples that I'll show y'all in the presentation. I don't know why that says that's blocked. I'm gonna get rid of that. All right, on to the next. So how I use Sunday's opening price in my strategy, right? So number one, I'll mark Sunday's opening price on the assets I'm looking to trade. I'll mark any higher time frame key levels near the opening price. Like I said earlier, I personally use fair value gaps and old lows. You'll also see me represent as internal range and external range liquidity. So the internal range liquidity, that's the fair value gaps, right? And then the external range liquidity, that's the old highs and old lows, right? So another one of the concepts I've learned, not just from ICT, but also from other ICT traders, just, going out there and exploring more ICT content, how other traders are utilizing this concept. That's so I kind of just like brought in Sunday's opening price filter and this exact step by step trading plan from one of ICT's older videos called his short term trading model, right? So everything is modeled around that, right? So going into step two, after I identify my key levels, I look for reversals and liquidity runs near Sunday's opening price level. So that's what I mentioned earlier. If I'm expecting us to expand higher based off of where we closed last week on Friday, going into Sunday, I want to see some type of liquidity raid between Sunday and Monday. I want to see some type of liquidity raid or expansion lower, and then see a reversal at that liquidity raid or inside of that higher time frame point of interest, right? So that's the idea, right? I'm not looking to capture the whole move throughout the week, so entering from Monday and holding all the way to Friday. I'm just looking to capture a chunk or a portion of the weekly expansion, whether we're going up or down, whether we're bullish or bearish on the week, depending on the fundamental analysis that we do. So make sure looking at the not higher time frame, but high impact news drivers, you know. So yeah, that's the idea. Step number 3, depending on my bias for the week, I typically use Monday's range as confirmation of liquidity run near Sunday's open. So again, I normally don't enter trades on Monday. I'm just looking to see, okay, from Sunday to Monday, how does the market open up? How does it move, right? So if I see everything take place that I just outlined earlier, like if I'm expecting bullish price action or bullish expansion through the week, right? So if that's what I'm anticipating, I want to see, okay, between Sunday and Monday, do we raid liquidity? Do we have a liquidity raid, or did the liquidity raid already take place after the close on Friday? And between Sunday and Monday, is there some type of like reversal indicator, whether it be like a fair value gap or a breaker block, order block, right? After a liquidity rate has taken place and SMT has taken place, right? So after all that has taken place, okay, now going into Monday, are we expanding higher and above that Sunday's opening price level? And if we are, okay, so going into Monday's Asia, which is where I normally start looking at the market and look for trades. If we have any type of like say fair value gap or an order block near the Sunday opening price level, okay, I'm using that level as the indicator of like, okay, if we do retest anywhere near this level, I'm already anticipating there to be bullish expansion anyway. So going from Monday night going into Tuesday's London session, I want to see expansion going through it. And most of the time if I enter in Monday's Asian session, I'm already asleep, right? So I won't know what happens until I wake up Tuesday morning and see what happens, right? And then I basically just go from there. So if I end up, waking up to stop loss being hit, Tuesday morning, it is what it is. If I wake up to profit going into Tuesday morning, I'm like, okay, now we finna just manage this trade for the rest of the day, right? Like I said, step 4, I look for entries in Monday's session, Asia session, going into Tuesday's London session. If I don't find an entry by Wednesday, and this is key, if I don't find any type of entry by Wednesday, I basically just don't trade for the rest of the week. And the step 5 right here, if I have a position open, right, I don't want to see any type of retracement back to Sunday's opening price after Wednesday. And if that happens, we may have a midweek reversal forming, right? So the reason why I don't want to if I'm not in a position, I don't want to trade anymore after Wednesday is because, remember what I said earlier, I'm looking to like basically catch an expansion move throughout the week, right? And based off where we open up on Sunday's opening price, whether we're bullish or bearish, right, for the week. If I see any type of expansion, let's just say we're bearish this time. If I see any type of expansion away from Sunday's opening price level, right, remember we only have 5 days to do so, right? So anywhere from Sunday to Wednesday. After Wednesday, if there's no entry, we only have 2 days for the market to actually do something, right? If it's going to continue expanding, it only has Thursday and Friday to do so. And something that I learned from ICT is that Thursdays, they usually tend to be the reversal days, So you tend to see a lot of reversals going on Thursday, especially like if we've already expanded a certain direction throughout the week. So that's where you'll see a lot of those retracements. I'm fine with the retracement happening as long as it's like far away from Sunday's opening price. But if I see like any type of retracement near Sunday's opening price level, well, I just go with the assumption that we're most likely just going to range out the rest of the week between Thursday and Friday, or we're just going to reverse for the week and maybe hit some type of low that was below Sunday's opening price or have a liquidity raise there. And at that point, if I was looking to be bullish at that point, I'm pretty much going to close the week in like the negative. So, um, that's the reason why right there why or that's how I utilize Sunday's opening price as the kind of like a, I want to say filter, but like kind of like as a confluence of like helping confirm my direction, right? So anytime after Wednesday, if I'm not in the trade, I just elect not to trade. If I am in a trade, um, before Wednesday, right? So say I enter in Monday night and I hold it from Monday night all the way to Wednesday morning. If I see any type of retracement back to Sunday's opening price again, like I said, there may be a midweek reverse performance. So I tend to elect not to um, I'll either close the position or I just like hold it to see what happens. But most likely I'm gonna take something off or just close the position altogether. So there we go. On to the next slide. So here we have a bearish example, right? So in this trade example, we saw the SMT divergence on ES with NQ. So this is futures. As you can see, Monday's range expanded above Sunday's opening price. So I have it marked right here, the November 10th, 2024 Sunday open. That's all the way right here. That's this candle right here. You see the 8th and the 11th. So the 9th and the 10th is right there in between here. So that was this opening candle right here. So Monday's range expanded above the opening price level up to here, right? Now I still didn't see any type of entry confirmation going into Monday night's Asia session, right? And that's the same thing over here. We didn't see anything on the NQ. So it wasn't until around between Tuesday and Wednesday, so the 12th and the 13th, and that's it right here, the 12th and the 13th right here. So on the 12th, Tuesday, ES formed this high right here, and so did the NQ. However, going into Wednesday, the 13th of November, on NQ, we had a higher high. So this high went above this high right here. Lowever, on the ES, this high right here didn't close above this, but didn't go above this one. So we had a lower high on ES. So this right here is our S&T divergence, right? Because these two assets, they should be moving in unison because they're correlated assets. The S&T just tells us that there's a break in this correlation. So there's some type of institutional sponsorship inside of the ES right now, right? And being that ES is the weaker asset, and what I mean by that being a weaker asset is that it didn't form a higher high like the NQ did, right? So I would elect to trade this one because it's the weaker asset and it's much more likely to head lower, and also provide me. I also elected to trade this one because they provided me the clearest type of price action, right? Whereas over here with the ES, it's just pretty much a small range right here. Whereas Monday, it identifies a clear range on the ES, right? So we took out all these highs right here, headed lower, and then retraced back going in between Tuesday and Wednesday, and we had the S&T. Not only did we have an S&T take place, the S&T also took place at that Sunday's opening price level. So remember what I said earlier. Between Monday and Wednesday, I'm looking to enter. Ideally, I want to enter going into Monday night's Asian session. But if I don't have an entry, then okay, now I have Tuesday's Asia and Wednesday's Asia. So this S&T occurred at the Sunday's opening price. So if I did see any type of retest going into Wednesday, I would have elected to basically use this as a retest level and then just hope for the best, have my stop loss here at this high right here, and if I get stopped, I get stopped out. But my entry level was around right here, this order block, at the order block that formed the S&T, right? Or that's also our change in the state of delivery right here. And then also had another stackable entry inside of here. This is all a demo account, by the way. I wasn't like trading live funds by then. But We also had another type of re-entry inside of this inversion fair value gap right here. And overall, our initial target was this low that was resting right here at the 5,986.75 level. And going in, basically entering from Tuesday night, going into Wednesday morning, after we were hit, after our like limit orders were executed on, right? We went ahead and expanded lower going into Wednesday, right? And hit TP, right? And as you can see right here in the slide, the PD array we executed on was last up candle that created SMT and rated a short-term high, which is a change in state of delivery or the bearish order block, and that's this candle right here. That was the first initial entry, right? And then had another entry inside of the inversion fair value gap, right? So that's a bearish example. Now, a bullish example, I may need to go to my journal for reference right here because you guys may not be able to see the analysis right here. But in this bullish example, we had a weekly S&T divergence between NYM, that's basically the Dow Jones or the US 30 for futures, and the ES, right? So you can see right here, right, on Sunday, the following week of January 12th, 2025, the opening price followed a weekly liquidity raid, which formed S&T with the ES, and that's it right here. So you have this low back in November, and now you have this low right here that was in January of this year, right? So this same low in November, right? The ES, it formed a higher low, whereas US 30 or the Dow Jones for futures, that same November low in January, we actually made a lower low, right? So that right there is the S&T divergence or breaking the correlation, right? So although that ES was a stronger asset, I didn't elect to trade this one because the NYM or the Dow Jones, it had the clearest price action, right? So it had the clearest type of price action. Like right here, my first target was basically just this internal range liquidity right here, or this first fair value gap right here from the US 30 inside of this dealing range right here. So from this high to this low, that's the dealing range. First area of interest was the internal range liquidity that's resting right here, right? So this is on the Dow Jones. Meanwhile, these same gaps is not present on NYM or the ES. So that's why I elected to trade the Dow Jones, because it provided me the clearest price action and the clearest targets, right? So from here at this reversal area all the way up to here was the target, right? So Monday's opening range expanded above Sunday's open. I placed a market order on Monday night inside of the inversion fair value gap formed from the previous week's Friday's close. And that's all of this right here. And as a matter of fact, I'm gonna go ahead and just make my way over to my trading journal. All right, so here we are right here. I'm on my Notion journal. I have my screenshot of this position right here. Like I said, there's that S&T from November 24th to January 25th. That's those same lows. That's those same key area levels right here. Right here, this is that internal range liquidity. So that's this high right here that I was targeting for this position. If I zoom in a bit, so you guys can see the January 12th, 2025, that's Sunday's opening price. All of this is Friday's previous close. So going into Friday, right, we formed that S&T going into Friday, right? And the Sunday's opening price level, it just basically expanded above here going into Monday. And my first entry was inside of this inversion fair value gap right here. That was left from this bearish fair value gap right here on Friday. I saw that price was about to close above it, right? So I basically entered a market execution order inside of this area, given that from a weekly perspective, we already had SMT. So just based off of the weekly chart alone, I was already anticipating there to be some type of like just large expansion going into this week or going into this particular week. So I was pretty confident in this trade. Now I could have got stopped out, and if I did, that's fine. But this trade idea panned out. But I had entered a market execution order inside of the inversion fair value gap, as you can see right here from the risk to reward calculator right here. Stop went below the low that made the S&T, and the take profit was this high right here, which is also that which is also the internal range liquidity right inside here, right? Because this is a form of liquidity raid. So the idea was to target the liquidity that was resting right in here. Now I did hold this trade. I entered Monday night and the trade was held all the way to Friday, right? Going into that week, and Friday we basically hit TP. And remember what I said earlier, right? I don't want to see after Wednesday. I don't want to see no type of retracement back towards Sunday's opening price, right? If I see some type of retracement all the way back down here going into Wednesday, that's most likely going to be a reversal, some type of reversal. That low is probably going to get taken out, right? But thankfully going into Wednesday, I want to say Wednesday is about right here where I saw like this large expansion go forward. Wednesday right here kind of had a retracement. It did have a retracement, but it wasn't nowhere near Sunday's opening price level. So I was confident enough to hold a trade. Looking back at it, if it was a live account, I probably would have elected to take some off at this point right here, especially since we're so close, and just leave the rest running. But I just left it open right here. And yeah, so now I'm gonna go back. As you guys can see, take profit was held. Take profit was the weekly internal range liquidity or the fair value gap. Trade was held from Monday night all the way to Friday. Oh shit. Trade was held from Monday night all the way to Friday morning's session upon hitting take profit area, which is right here. So from Monday night all the way to Friday right here, right? And that is how I trade. So that is how I utilize Sunday's opening price in my trading, in my own personal trading. And there we go. That's the end of this presentation. If you guys stayed to watch this long, I appreciate it. I know I fumbled over my words a bit. I'm still kind of nervous trying to get, better about making these YouTube videos and everything, making this educational content. So if you guys did enjoy the video, as if you do, please like the video. Also, feel free to comment down below. Like I said, if this video was helpful, or feel free to just talk to me in the comments about what kind of stuff you guys utilize from ICT's lectures and his mentorship stuff, and subscribe to the channel also. So yeah, with that being said, I hope that this video did help anybody out there that may be still trying to find their way of figure out their trading plan and everything of the sort, because you can also utilize Sunday's opening price not just for swing trading. You can also utilize it for your day trading as well, right? So if you're expecting, like I said, if you're expecting there to be buys all week or there to be bullish price action going into the week, okay, as long as you don't see any type of retracement back towards Sunday's opening price, any type of retracements you see then, as far as like say Tuesday and Wednesday, as long as it's nowhere near Sunday's opening price, then you can elect to enter and continue to catch the move that's going higher towards any type of higher time frame key areas or point of interest, and vice versa for if you're trying to short the market. So if you guys enjoyed this video, I ask that you please do like, comment, and subscribe. And with that being said, this is Jay Davari. See y'all in the next one. Peace out.